This is our Forex blog for August 29th, 2013, and I'm going to show, starting in the beginning of class, how our systems did. But first, let me just explain what these are. They're currency indexes, which we create synthetically based on all the dollar pairs, all the yen pairs, all the euro pairs, all the pound pairs. And basically, by looking at the chart, you can easily see the euro's going down, the dollar's going up, the yen's going down, it's underneath its hourly moving average. Notice how most of the time when the currency hits the containment bands, it will bounce or soon after pull back. You know, if it's not that strong, it'll bounce off the 1.5 red band. If it's a little stronger, it'll go to and sometimes slightly above the white 2.0 band. But almost all the time, it's going to reverse at these levels. And oftentimes, once it goes down to this level, the next wave, lower or higher, is a pretty decent place to do counter trade, especially if that one also is at or above the upper band. That gives it, plenty of time for all the buyers to get out of or start exiting their trend trades with profits. And so that selling at the highs or buying at the lows, oftentimes causes reversals. So basically, let me start by showing how the euro-dollar signals did today. We're going to release that soon. And as you can see on the chart, most of the trades are going to be trend trades. Sometimes we do have some counter trend trades that show up once the market moves statistically too far, or various support resistance areas are hit and it's not that weak. We will have some buys. Obviously that one failed. This was a huge win. This was a decent win. This one, went up a little bit. This one here worked a little bit. This one here kind of failed. But you had about a half an hour to get out of this trade with a very tiny loss. This one worked. This one worked. This one worked. This one you would have probably broke even. That one worked. That one worked. And these are basically tons of different signals. There's over 65 of them now. Most of them are trend trading. We actually look for and take Fibonacci based trades, and we also, when markets move statistically too far and price is coming up to Fibonacci profit targets, we're also showing entries at those areas as well, if and only if the market's statistically not that weak. So there's not a whole lot of counter trend trades in the euro dollar today because it's so weak. In most currencies that are trending down this far, we're going to have a bunch of buy signals at the lows. So this was designed for my own trading for automated systems, and we're going to put it in the software. It's not going to be automated for our users because the broker we've executed with really doesn't take retail traders. It's for bigger account sizes and institutions and corporations and so forth. But you will be able to see these signals in real time. Once the bar closes, it will show up, and especially if you combine it with our currency indexes, you should do quite well. So the currency indexes, again, show you what each individual currency is doing. And basically, you want to find a trend. Let me link all these together so when I scroll one back, they all scroll back. You want to find a nice trend and then kind of wait for a pullback. And you can see the euro's been trending down a lot. This is probably the deepest pullback it has. Ideally, it would work its way back up to the weekly point of control or the hourly moving average right here. We want to sell that. Now the dollar's up too much. The pound is at the one band, but it could obviously go up to the white band. Ideally, you want to see a weak currency kind of go up a little bit and a strong currency pull back. But as you can see today, the euro was so weak, it just kept going. Let's take a look at the euro yen at that time, and I'll show you how you can use these for trend and counter trend trading. This is coming up to 530 right here. The euro is probably likely to pull back, and as you can see, it did. It pulled back from 30 all the way down to the whole number. It fell 30 pips. Let's take a look at the euro dollar. Now again, the dollar's up too much. It's above the upper band. However, the euro is very weak today. You got to be very careful if you are going to take trades in the dollar, which is so strong. Watch it like a hawk. Wait for it to break these lows. Put your stop above here, risking less than 10 pips. And as you can see, you might have made 10 pips, or if you got out here, even up to 18 pips. So the currency indexes work, but they also let you know when it's a little bit riskier trade. There's a slew of things you can do with these as far as you can draw trend lines on them. And when price breaks trend lines, especially if it's hit multiple times like this one, this is ideal. And in fact, even more important than that trend line break, the euro kind of slowly worked its way back up to the hourly. Basically, it went sideways where the hourly moving average fell to it. and that's a great place to go short. And we can see that the yen is weak. It's underneath its hourly. The pound is strong, and the dollar is the strongest. Obviously, a little bit after 8:30, the euro dollar is going to be an excellent one to be selling, and you can clearly see that on this chart right here. It fell from 70 all the way down to 20. Huge move. Or if you got out right here, you made 20, 30 pips. Let's take a look at the euro pound. It's also going to fall at 8:30, but not quite as much because the pound wasn't as strong as the dollar. But you can see, knowing when a currency is likely to reverse, you can sell it against most of the currencies. In fact, without even looking at other ones, let's take a look at various euro pairs at 8:30. Here's 8:30. It fell, even though it went up a little bit later. The Swiss must have been weaker than the euro even. 8:30. You can see this one fell considerably without even looking at the other ones. So Euro New Zealand, 8:30. It fell for an hour and a half. And so by using these currency indexes, even if you're just watching the euro, the pound, the yen, and the dollar, most of the time when they have high probability patterns, you can take them. For instance, the yen was trending down and it worked its way back up to the hourly at 6:30. The pound's strong. You could look for buys in the pound yen. Now, we know that the pound really never took off, but let's take a look at a trade that really shouldn't make money. If the pound goes sideways and the yen falls, you're still going to make money on the trade. If the pound falls and the yen falls, you could still make money on the trade if the yen falls faster than the pound. That's the beauty of this. So you can get into trades, say the pound yen at 6:30, looking for buys, and you can see it didn't immediately take off, but it did over the next hour and a half go up from around 152.10, 15 all the way to 60.65. And let's link these together so that we can watch them all at the same time. I have the colors up there on the top. So we'll go back at 6:30 and look at this. Once you're in that trade, because the yen's likely to reverse, right? You might get in here when the bar goes over the high. You might be in there at 152.10. You're watching this. Pound's not going down. Pound looks like it's about to go up here. The yen is going down, so you're pretty set now. You can see the pound now took off, and notice how the chart also went up about 8 or 9 pips. Now it is at and above the upper band, so if you're a scalper, you might have taken 10, 15 pips right there. And again, you can use any time frame charts. If you're going to scalp, you're going to use tick charts or 3 to 5 bar range charts. But you can also get into a trade and get out of half with 15, 20 pips and then kind of trail the other half. You can see the pound's kind of not going up, but the yen is falling here. And sometimes, like I said, they can both be falling. If the yen is falling faster, you'll still get the pound yen going up. And that's the beautiful part about this. And then a lot of times when one's falling and the other one's falling, when one starts to go back up again and the other one falls, you get this continuation pattern on the trade. And you can see again the pound reversed. So you can, and what I frequently do is kind of get into a trade, watch it. When it goes up, kind of stalls, goes up. I give it 2 or 3 tries to go up as long as it doesn't break support. You can just watch where support areas are, which is underneath these lows. As long as it stays above there and the yen's falling, you can stay in the trade. If it breaks that level of support, that means all the pound pairs are starting to pull back at the same time, and your trade's probably going to stop you out soon. You might as well exit and try to catch an extra 3 to 10 pips if you can. And so, not only does this help you find trades, stay in the trades as long as possible, and also get out before your stop gets hit to capture another 3 to 10 pips sometimes. I'll leave the euro dollar signals on here so you can see this and obviously realize that without even understanding how to trade, most people aren't going to learn 65 plus patterns. And when I'm done with this and add every pattern I can find using range patterns, double tops, double bottoms, fibs, retracements, trend line breaks, and so forth, I might be up to 200, 300 different patterns. A lot of them have very similar things that I look for, but they use different indicators with different settings. So no human's going to be able to remember, even 10 different trade patterns and watch multiple charts at the same time, but the computer can easily do that. So you can use your currency index, be in the best currencies. If you see the euro's weak and the dollar's strong, wait for sells, get short, avoid the counter trend trades, short here, short here, short here, short here, short here. You know, that's what I would recommend, and that's, you know, how I manually trade. For automated systems, it takes every trade. So obviously some of the counter trend trades are going to fail, like these two. You know, actually all the counter trend trades today failed. Most days they actually work quite well, and you'd be surprised at how well this carves the market up. You know, boom, 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 boom. That one here failed. That one worked. That one worked. That one worked. This one worked. So most days the counter trend methods, you know, the reason I leave them in here is because statistically they make more than they lose, and they tend to work more in most days. Today, not so much, but you know, you got to leave them in there for the days when they do work.